Welcome to Personal Pension Radio Podcast, where you get unconventional insights into retirement and lifestyle design that actually work. You don't have to settle for the same tired Wall Street advice. Break away from the herd and learn how to achieve the retirement lifestyle of your dreams. And now, here's your host, the income engineer, Kraig Strom.
All right, back on Personal Pension Radio. Excited to have you here. Thank you again so much. Yes, I am the income engineer broadcasting from the Personal Pension Radio Workshop Studio here in Southern California. If you haven't been to personalpensionradio.com, get on over there, check it out. I will be working on an update this year on Personal Pension Radio. Right now, it's just a good place to find back episodes and show notes. If you're looking for anything in particular, you can't find it there. There is a contact me there on Personal Pension Radio. Check that out. Now, what is this show all about? Well, it is about my passion for education where the Wall Street financial advisory machine is lacking. The Wall Street financial advisory machine is that machine that taught me, but it never really taught me first to ask what's behind the curtain. It never taught me, for example, the complete economics behind retirement income. Most advisors today have been educated by the same machine that taught me. And I pride myself in being a bit of a rebel when it comes to asking questions, peeking behind the curtain, wondering why. Is that all there is? Is there more information that could go together with that? Are there questions that I should be asking for the benefit of my clients? I'm passionate about that. So this show is about optimizing retirement income. It's about going after maximum lifestyle income after you sell your business or after you retire so that you actually get the full benefit of all that hard work. Now, let me tell you, though, I've been having this lately, and you're going to hear this. It's actually a question that had come up. I've been getting this often now, that people that I meet or people who call me or contact me through the podcast are being told that a particular product or a thing is the answer to retirement. And it's the answer, it's the silver bullet. This life insurance is the most amazing thing ever. This investment over here, this real estate, this letters and number combination that we made up. I mean, that's what I heard today, actually. Another one of these gimmicks that was made up out of a combination of things in the tax code that says, now this is the answer. Real estate or annuities is the answer. Let me tell you right now, please, 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 none of these things by themselves will actually help you optimize your retirement income. You must have an integrated approach that brings the best of these things together. Mutual funds, life insurance, annuities, real estate. When you bring all of these things together and you leverage the benefits of each of these things, it's fantastic. It truly is. And that's what this show is about. I am here to give you hope for retirement. If you've gone to visit with a financial advisor and you've heard the phrase 4% rule, or let's take a look at a Monte Carlo simulation, well, then you know what I mean. It's a very depressing conversation. A quick little snippet on the 4% rule. Let me help you. If you have not been to your financial advisor to ask them about your retirement income, let's take a little trip there now. So let's use $1 million. All right, great. Everybody has that fantasy, that target. I'm going to save up and get to $1 million. Well, you walk into your financial advisor's office and you ask her, you say, hey, how much income can I have for my $1 million? And they say, well, based on the ups and downs of the stock market, we don't know how long you're going to live. Maybe you should start taking 4% out of your $1 million account. 4%. Yeah, $40,000 a year out of your $1 million account. What in the world is that, right? If you've never talked to your financial advisor and asked them for an actual income discussion instead of just a saving discussion, ask for an income discussion. How much income can I have? And if they say, well, based on the Monte Carlo simulation, it's a computer program we use to figure out whether or not you'll run out of money or not. Whoa, wait a minute. Those are the things that I'm telling you right now. If you have not heard the 4% rule, if you have not heard a Monte Carlo simulation, I'm telling you, you don't want to. Think about it. $1 million in a retirement account, and someone suggests that based on the probability that you might live too long and the ups and downs of the uncertainties of the market, we think you should only take out $40,000 a year. Yeah, that's not a plan. That actually is a plan. It's a plan for disappointment. I pride myself in engineering and designing retirement income plans that blow those numbers out of the water. It only happens when you have an integrated approach, when you have a comprehensive look at income and the economics of income. I talked about this last week, the up the mountain, down the mountain. Accumulation and savings is only one half of the journey. The economics of retirement income are completely different. So if you haven't listened to the last episode 106, go back and listen to it. Give you a really good idea of what I'm talking about when I say the economics of retirement income. So I am here to give you hope for retirement. That with an integrated approach, it is entirely possible to shoot for things like 60, 70, 80% more than the typical financial advisor income conversation is going to give you. And that's what I'm all about. Maximum retirement, maximum post-exit income. That's what I love. Now, disclosure. I am not an attorney. I am not a CPA. I am a certified financial planner professional. I'm also a chartered financial consultant. I'm also an investment advisor representative. Please, with all that said, don't act on things that you hear on my show as if it's advice for you in your specific situation. You've got to meet with a qualified financial advisor. I would suggest meeting with a certified financial planner. And by all means, please do not take advice and act on things that you hear from financial entertainers. Financial entertainers are people who have no licenses, they have no oversight, they have nothing that gives them any credentials or qualifications generally to speak as a financial planner. Please don't act on things that you hear from financial entertainers, okay? Now, segment 1, let's jump in. Segment 1 I call Watch Your Step. Watch your step. So I have recently moved my office, moved my business office to another city, and I expanded into a larger room in our home for my home office. So now I have a much larger home office, and as part of this change and expansion, some of my mail, things like my magazines, my industry publications, had been building up at the old office, and I went to get them last week. And so I ended up with 5 or 6, 7 different financial magazines that I hadn't received in a while. And they're sitting on my table in my now home office. Now, I'm going through this and just taking a look, and this one article popped out, and this is an article in Financial Advisor magazine. Financial Advisor magazine that says, "Dumb and Getting Dumber. Swimming upstream against the currents of financial illiteracy." Financial illiteracy. Basically, this article says, the key takeaway is that only 57% of the Americans surveyed could pass a basic financial literacy test, essentially saying that Americans in general are dumb as a stump when it comes to financial literacy topics. Now, whose fault is that? Let's go back and recap something that I've said on this show several times, okay? Several times. Please, pay close attention. The financial services companies, they represent, that's Wall Street. That's big money, big money, big money. Remember, There's nearly $20 trillion in retirement plans alone. Those are all held in the financial services world, right? So the financial services world spends about $17 billion per year on marketing. $17 billion per year on marketing. That's roughly $54 per person in the U.S. per year. That doesn't count the marketing of retirement products, college loans, and investment products. So we're pushing that $20+ billion on advertising, right? So Financial Advisor Magazine publishes this article, Dumb and Getting Dumber, Fighting Financial Illiteracy. Well, whose fault is it? Right? The financial industry obviously controls the purse strings of marketing, right? They control the purse strings, and they spend nearly $54 per person marketing the accumulation message, okay? And the total amount spent is estimated, this is on education, the total amount spent on financial education is only $670 million. $2 per person per year. $54 on save, accumulate, save, put more money into our system. $2 per year educating those people. So you wonder why. Why are we getting dumber financially? Well, it's because the people who control the money for the education are putting out information that benefits them. Totally makes sense. So this article made me stop and take a closer look at my magazines. So let me help you understand this. So now in my hand right now, I am holding Financial Planning Magazine. This is a magazine for certified financial planners, and it generally just comes to me because I am a certified financial planner professional. So let's just go through this, right? I just like to take a look, and I'll take you for a little walk. So I'm going to flip open to the very first page. It's a double wide, and it is an advertisement for Raymond James. Raymond James Financial Services Company, well-respected, good company, but it's a financial services company and award-winning marketing for professionals. Okay, next page. Oh, look at that. It's a giant full-page ad for Edward Jones. Edward Jones, gotcha. Okay, let's go to the next page over here. Oh, there it is. Prudential. Prudential Investments, retirement advertisement, a 2-page ad. All right, I'm still working my way trying to find content. Well, there is some content, but a full-page ad for Nationwide, annuities, life insurance, retirement plans, mutual funds. Well, I'm still working my way to content. Oh, well, there looks like some more insight. Oh, no, there you go. Another full-page ad for Money Concepts, Wealth Management, and Financial Planning. All right, so let's see the next page. Well, we finally got some content on the 10th page, but right next to it is a mutual fund advertisement for Dow Jones LLC and Indexology, and I don't know what the heck this is. But it's another full-page ad for a Wall Street financial advisory type firm. So this is one magazine, and it took me 10 pages to get past all of the advertising that is basically telling me that I need to tell you to accumulate, save, invest, right? That's my point. Now, On Wall Street, I've got another magazine here. It's On Wall Street. It's for financial professionals, and I open it up, and the very first page, oh, there you go, Raymond James. Again, Raymond James owns the inside cover there. And then I open the second page, and it looks like we've got, a full-page ad from Wells Fargo Asset Management. Not the bank. This is the investment side of Wells Fargo. All right. Then we open it up to the next page. Another full-page ad, this time for Charles Schwab. All right, I'm opening up again. Well, I do have some content, but it's a big ad for the Foundation for Financial Planning. All right, so it took me about 7-8 pages on this particular one to get into the content. So the article, Dumb and Getting Dumber, the financial industry is clearly not going to spend any significant money to change it. Why do I share this in the Watch Your Step segment? Well, you've got to be proactive with your learning. You've got to be proactive. You're listening to this podcast means that you are different, means that you are being proactive. Please share this kind of information. When you find a podcast or good quality education, share it with your friends, please. Share it with your family, because unfortunately, they're never going to get this kind of education from anybody else. Now, segment 2. This is a listener question that came in. We're going to start with this. So 2 listener questions today. Kraig, let's see if I can read this here. I purchased a life insurance policy 2 years ago, and I think it is the indexed universal life you talked about. How can I find out? Okay, so I did some digging on this with this person before I responded, so I'll just go through. Here's what you need to do. First, you need to check your policy document. Any life insurance policy will come with an actual contract. It'll come with a contract, so you can, usually on page 3 of your contract document, it'll tell you what you've got. It'll tell you if you've got a regular universal life or an indexed universal life or a whole life or a variable. It'll tell you what you have. Now, you also need to request an updated illustration. So these are things that I've already gone back to this person and I responded back to them. You got to request an updated policy illustration. So let me explain. These universal life policies and whole life policies and indexed universal life insurance policies and variable universal life insurance, they all come in 2 parts. One is the basic policy contract that is generally the same across the United States. The second part is an illustration of values and definitions and details. The illustration of values and the detail illustrations, those are state specific. So you essentially will have a contract and you'll have an illustration that goes with the contract. So what I had suggested to this person was that she request an updated, a current forward-looking illustration that shows her indexed universal life insurance policy and shows what it's projected to do. Now, I encouraged this person to request the illustration to illustrate no more than a 6.5% return. One of the controversies with these indexed universal life policies is that advisors or agents are showing them illustrated at 7 and 8% linear year by year returns. Well, linear returns don't happen. First of all, the markets go up and down, etc. We know that. So a linear return doesn't happen, let alone a 7 or 8% linear flat year by year. So at a maximum, I suggest get an illustration, request an updated illustration showing from this day forward, if you keep paying your premium and the policy gives a 6.5% return, what will it be projected to look like? Now, I also suggest requesting a guaranteed policy illustration. Now, what I mean by that is you want to know what is the minimum amount of premium needed to keep the policy in force until, let's say, age 100 on a guaranteed basis. So what's the minimum level of premium needed to make sure that that policy is just flat out guaranteed to 100 no matter what? Okay, so the listener made this request to the insurance company, and the insurance company directed her back to the agent who had sold the policy. And the agent, he wouldn't fax it to her. It's not hard to do to get an illustration. It's not difficult, but he was a little confrontational, apparently. He did not want to fax the illustration. He insisted on a face-to-face meeting, which made this caller, this listener, very uncomfortable. She insisted further, and he said that he would get it done, but he didn't actually send it last week, so I don't know if she's received it or not. It's making me feel like, well, this person might know that something doesn't look good with that illustration. So here's my call to action again, because I don't know the answer yet, other than to tell you, if you've got one of these indexed universal life or an old plain universal life insurance policy, if you've got an old whole life insurance policy or a variable universal life insurance policy, if you have an old dusty cash value policy, what I'm trying to tell you is get that sucker out of the drawer, contact me through Personal Pension Radio, or connect with me on LinkedIn, or email me at Kraig@kraigstrom.com, something. You've got to get that thing reviewed, and I'll help you. I will absolutely help you review that old dusty, sadly ignored life insurance policy that you don't understand. Please let me help you, okay? But especially if you know that you have an indexed universal life or a variable universal life or a whole life insurance contract, one of these cash value type policies, please contact me so that I can help you with a review. The longer you go without knowing the truth about your life insurance contract, the worse off it will be to fix it, if it can be fixed, right? Now, next question that came in said, Kraig, my husband and I own a successful manufacturing business. Congratulations to you, by the way. That's awesome. Small business is the driving economic force in the world, in the U.S. especially. So they continue and say, it's taken years of hard work and sacrifice to build the business, and now we find ourselves in a major tax pickle. I like that. In a major tax pickle. Our tax bill is eating up a huge portion of our income. We asked our CPA if there was anything we could do to cut our taxes, and she suggested a 401k plan for our company. We did that, but we were only able to put away a maximum of about $50,000 each year. Now, that's a lot, by the way. That's way more than most people could do in the 401k. So once again, congratulations for having that success. But it's good, she said back there, that they worked really, really hard, took years to get to this point. So congratulations again. But she said, we did that, meaning they did the 401k, but they're only able to put away a maximum of about $50,000 each year for the two of them. So that's about $100,000, I guess. We asked our CPA if there was anything else we could do to lower our taxes, but she did not have any more ideas. Is there something we're missing, is the question. Is there something we're missing? Well, yes. Possibly a new CPA, okay? I don't know. So some CPAs are creative, some are not. Some are not creative. So, and by creative, I don't mean making up tax rules or making up tax schemes or anything like that, but creative, I mean thinking about how you would design a plan, looking for options. Remember what I say, the learners will inherit the earth, right? Some CPAs, like some financial planners, are not learners. They have learned what they're going to learn, and they don't learn nothing. They just ain't going to learn anything else, right? So let me give you a suggestion on something that could potentially help you. And I notice I'm saying could, potentially, maybe, possibly help you. I do not know whether this is a good idea or not. We should probably talk off the podcast directly together, and if you're interested, I would bring another CPA perspective to the table just to give you a second opinion. But here's what I would suggest. Have you looked at a cash balance plan? Cash balance plans are another form of tax-deferred retirement planning that enables people with the right situation Now, generally business owners that don't have lots and lots and lots of employees, maybe less than 20 employees. And those are maybe some good guidelines. But here's the thing. They allow for contributions as high as $184,000 each, depending on age and depending on multiple different things. But I'm saying up to $184,000 a year each in tax deferred. Now, you'll have to pay taxes on it someday, but can you imagine the impact on your taxes if you could put away over $300,000 extra? That is enormous, right? What if you could only put away an extra 50, an extra 100, put away a total of $100,000 instead of just 14 or 15 or 18,000? Okay? The cash balance plan is little known. It is something that a lot of financial advisors are unaware of. Sadly, a lot of CPAs and tax preparers are unaware of the power of a cash balance plan. So rather than going into bunches and bunches of details here, what I will offer is, if you're interested, send me an email at kraigstrom.com. That's Kraig with a K, at kraigstrom.com. And I'll email you back a link to all you would ever want to know about cash balance plans and the design and what you need to know. I have a phenomenal group of people that I work with that are experts at cash balance plans and can even help your CPA understand them even better, teach them how they could work for you. So cash balance plan in this case could be phenomenal. There are other tax planning things that can be done, especially in a manufacturing business. Those might be things that the right lawyer and CPA partnership could come together with a financial planner and help you do some amazing, amazing things in your manufacturing business to not only not reduce your taxes, but get a legitimate tax deduction, to actually simply reduce the tax, not just postpone it. Okay, so the answer to the question is yes and yes and yes. There are additional things that you can do to mitigate your taxes. You just have to have the right team. And I am fortunate with all the years that I've been doing this, I have been able to put together just some of the best, most fantastic connections that I've got that team. I've got that team all day long. Just fantastic. Now, that's going to wrap it up for today. Please remember, the future belongs to those who take action. Take action. Get off the log. Remember, don't end up staying on the log. 4 frogs on a log. 3 of them decide to jump. All the frogs are still on the log because they decided to jump. They didn't actually do it. And remember to be a learner. Learners will inherit the earth. Don't be one of those people that are dumb and getting dumber. Be smart and getting smarter. And if you're not getting the education that you need, keep searching. Contact me if you have a question about just about anything. I am always willing to see if I can help. Truly excited and appreciate the opportunity to have been here and doing this podcast now for 107 episodes. Greatly appreciate the support. Share it, like it. Give me a review on iTunes. That would be a rock star way to start the year. Would be some new reviews on iTunes. Really appreciate it. I will talk to you again soon. Take care.
Thank you for listening to the Personal Pension Radio podcast. We took notes for you, so if you missed any part of the show, you can find a full transcript of each episode at personalpensionradio.com. Be sure to download your free retirement income crisis report at personalpensionradio.com. While you're at it, we would appreciate some iTunes love. Please leave us a fantastic rating on iTunes by going to personalpensionradio.com/iTunes. Thanks again for listening. Now for the disclosure. Information presented is for educational purposes only and is not intended for solicitation, sale or purchase of any security or financial product. Be sure to first consult with a qualified financial advisor and your tax professional before implementing any strategy discussed here. The term personal pension refers to a marketing name designed to educate future retirees and retirees about the economic principles behind creating their own pension-like income. The term personal pension is not intended to be confused with a defined benefit pension plan offered by an employer or by a government entity.